Alright, good afternoon and welcome to the end of day review for today. And today is October 22nd, 2024, and it's Tuesday. So it's second training day of this week. And this week we don't have any huge high impact news. We don't have much, just maybe the consumer sentiment on the Friday. Other than that, we don't have any high impact news for this week. And we are in the week 43, right? We are week 43, right there. So we are week 43 for this week. And we are in the earnings season. So we have a large cap. Let's see if we have any large caps earning. This week, I believe we're gonna see huge. This week and next week, we're gonna see the earning report for Magnificent Seven company for this week. So over here this week and next week right there, we have the GDP data on the 30 and GC data on the 31st right there. Yeah, October 30 and 31st. So the BCR is like the subset of the PCI data, which is inflation number metric. We don't have any Fed meeting, so until no Fed meeting until November. All right, that's out for the economics new. And now we look at the price action or the trade we take today. Before we go any further, we want to review the dilemma we had yesterday about this, right? You remember we did mention that if this is gonna be reversal, then this not gonna be reversal. So we have to reconcile this. Here's the ICT model, and here's the rule we observe, that the price never go from consolidation, go to expansion, and then go back to consolidation. It falls. That rule is very clear, and we haven't seen any exception or any conflict. But this second rule is kind of, yesterday it gave us some kind of conflict that we have to reconcile. Basically, it will never go to reversal and then go back to reversal. So basically, from consolidation, expansion it goes to reversal, and reversal it go back to reversal. We haven't seen that, but we did see yesterday. And here's our understanding. Let's see, we're all right up. So here's our understanding from yesterday, right? From yesterday, we see right here expansion, retracement, and then is expansion like that, and then this one is reversal. If this one reversal, so right here it should not be reversed, but it did reversal, and then right here it's supposed to be neglect out, but it did not. It's reversal again. So how do we resolve that? Resolve the conflict from the rule right here. It will never go, reversal to reversal, back to back like that. Well, there another way we can look at this. If we look at this way, then that rule will not be violated if we still honor that rule. Basically, you see the Sunday right there. You can open at 8:13, so you consolidate right there. So it's all start with consolidation, and then you see the expansion. Right, the first leg expansion, and then in the London is retracement, and then boom, it get another expansion move, which is the second leg down, and right there we consider this as a retracement. Well, it looked like a reversal. For sure, it looked like a reversal, but it did not break the level. It's just a stop run right there, or buy sell liquidity, London high rate right there, and then we can treat that expansion, retracement, and then boom, reversal. So we treat this as a expansions, excuses. So basically, it's gonna be retracement and then expansion, and then from there you have a retracement or reversal right here. So it makes sense. If we look at this way, then this rule can be reconciled. But if we look at different right here, this rule cannot be reconciled. It violates. So that's the thing we want to bring to attention right there. And we know that in trading, we will not have a absolute rule, because the market is very random, right? We try to put a framework or a pattern, but it's very random. The setup or the rule we come up with, it cannot be absolute. There's some exception right there. So that's something that we have to work with. We cannot get it right all the time. So there's some deviation right there. With that in mind, then when we okay with this second interpretation right there, so basically it's going to be retracement and then expansion. Because expansion, it take down the hit rate, or it take out the sell liquidity right there. But the second way of interpretation, the second way to reconcile is must make much more sense, because the whole thing right here, you can see that is a expansion, retracement, and then boom, the second expansion right there, and that is reverse. So it make more sense. Right? If you look at it way, make more sense, and we still honor this rule. We still resolve the conflict, or reconcile the rule right there. That is one thing that we want to point out right there. All right, so here's another things we took a very beautiful trade today, but we took in the evening because we see the setup. Here the setup. All right, yesterday, here's what we saw yesterday. Here's at the end of the day as yesterday. What do you see right here? So basically we see a short setup. Short setup right here. You see that level right here at 58, 68, 25. You see that it tests from above. It break before, right? Test from above and reverse. Right there. That is the short setup. Right, test from above and reverse. Right, that is the type 1 reversal. Right, we can look at this level also. The purple level right there is at 15,895. So keep in mind, yesterday is close above that. So you see that So you see that the source setup right there on the daily time frame. Where our daily time frame? Okay, where our okay, so our time frame right there, right here. So that's screenshot we take right there. You see that level? So it break test from above and what it gonna reverse. So that is our idea right there. So remember the setup we have. Yeah, so here's the detailed setup that we put together. So basically, when the market's closed, yesterday we see that it's close above the level 58.95, which is the purple right there. Go to the chart, you see that yesterday it's closed right there. You see that it closed above that level. So we look into the daily time frame. We see the setup. So it breaks test from above, so it's gonna reverse. So it's gonna hit, it's gonna break that level, 58.958, and also it's gonna break, it's gonna revisit that level, the 58.68 right there, because it touched that level. It touched from above of that level. Yes, that's an idea right there. And yeah, so basically we saw the setup, right? Even though we saw a little bit late, because it would be best if we go to at the open of the 18 hour, but we wasn't available to check the trade at that time. So when we available, it already moved down. When we available at a 23 hour, right? So it already moved out here, but we still see the huge move right here. It's gonna hit that level. If we catch right here, then we have a huge move. It's already one leg down, so we anticipate a second leg down. Because look on the daily, you know that it's gonna hit this level. So that's which way we're going, and we take the trade right there. We're going at 85, and we target at 70. So it's about 3R right there. Yes, 15 point with the 3R right there. And we put a stop loss above here. Stop loss of 58.90. So we took the trade in the evening. It's about 23:05 hour right there. And it turned out a very good trade. And the target we hit right there. 58.68 right there. It hit at 5:15 at the London closing at London right there. And you see that is the moment that it hit the level right there. It hit the 68 and then it retraced. Yes, so it's a very beautiful trade, and we check the huge sum of profits right there. We add 10 more contracts to that. So it's a beautiful. You can see that we take a huge sum of profits. Yeah, here's the recording we recording last night in the evening when we took the trade. He said we short, we put our stop loss right now because we know that it's gonna go down here. It make the second leg down because it needs to touch that level. That the setup we see on our daily, right? You see the level right there. So this level is gonna touch this. The best entry is at the 0.18, but we wasn't available, so it's okay as long as we know the direction. We still catch the second leg down. It's huge. It's 3R for us right there. Is that we go in right there. We take 11 contract when we aim for 3R right there, and The good thing that, we let the trade run overnight and we go sleep, so we don't babysit. I think if we babysit the trade, we may attempt to exit the trades because it's going to retrace against us. And that's the beauty right there. Sometimes you have to walk away, let the trade work out. You see that it retraces right here. If we get nervous, we get exit right there, it's retrace. But we with the stop loss right there, eventually it hits our target right there. Yeah, so we stop the recording because it's overnight, so we let go sleep, and in the morning we come back, we see a nice and handsome profit right there. You see that when we start it's 8,000, but minus the commission. But the craziest thing that we give back. This is one of the challenge we need to improve every day, that we tend to give back out again. I think we should be patient with ourselves, and we have to be aware of our emotion. After a big win, we experience the phenomenon is called euphoric. That means we feel like we're unstoppable, and also the greed coming is just formal. After that, we just, wow, we can win big, so we can win more, and that is the reason we got euphoric right here. So basically, we get euphoric right there, and before 9:31, we try to go long because we thought that right here it's gonna reverse, because you see that it breaks, test from up and reverse. Yeah, but it did start out right there. That's the first short trade we took right there. And let's see why we make the mistake right there. Because that's this our right up right there. So basically, if we mark down the 930 high at 58.72, we can see that it's formed a very nice setup for breakout reversal type 2. So basically, it tests from above, it break, and then it reverse. Heel reverse. However, it is a very very high resistance liquidity run. It's not like yesterday. You see that it's very low resistance, right? It's easy. That's much boom boom, but here it's just retracement. See that retracement, boom. So we have to stay tight with the trade, don't exit early in order to hit our target. That's a tricky for today. Today it's very hard to trade. But yesterday the move so easy to catch. So that's called high resistance liquidity run right there. You have three retracement, boom, boom. Expansion, retracement, expansion, retracement, expansion, retracement, and then boom, last retracement right there. Let's save it up. Yeah, here's the setup at 9:30 yesterday. You see that? So basically, you see the level right there. It tests below, it break and reverse. That's the short setup for yesterday. And today also around, the high of the 9:30 also create a formation, a very good setup for long. But in this case, it's for long, but it's also a type 2 test from above, break and reverse. See that? That's type 2 reversal. Here's the playbook for us. So we have two types for breakout reversal. One is type 1 right there. basically it break first and then it's retest or test and then it reverse. That's the long and there's the short setup. For the reversal type 2, for breakout type 2, it tests first and then it break and then it reverse. So slightly different right there. And look at the setup we have today. So it's test first and then it's break, right? Test, break, and then it reverse. So that's type 2 right there. And yesterday, the same idea, but it's a short setup for yesterday. And also it's a type 2. Yeah, it's type 2. Basically, it's test, break, and then reverse. That's short setup for yesterday around the high of the 930. And today, the high of the 930 also create the setup, but it's for a long setup right there. So sometimes we don't need the bias. We just need the 930 formation that can give us a good good direction bias right there. And also if we look on the we know that it's the gap down. You see right there, the gap down, and this rate right there, it's gonna fill the gap. So that's the target right there, is fill the gap right there. So wait for the 930. You see that? If we look at the 15 minutes time frame, but it's the regular trading hour. It's not electronic hour, so you can see more. You see the gap down right there, and the 930 you mark is right there. Wait for it below this level and boom, it reverse. Yeah, the 930 give us the reason that a gap need to fill. So definitely if it failed to break the high or create a fall breakout the high, then definitely it's gonna go in and reverse and fill the gap, because it have the magnets right here. It need to go up because that's the liquidity pool right there. Oh, now it's not the 11, actually it's the 1045. Yesterday it's the 1050. Yep. Yeah, that put that into to our setup for today also. So if we put all together, we have a very good direction bias where the market gonna head into. All right, so we put two together, right? One is they both 15-minute time frame, but the first one is the electronic hour, and the second one is a regular trading hour. So we can see the gap, and that is the liquidity pool that is going to go up. Sometimes we so cut off, we don't see that, but sometimes we have to step back and see. Yeah, so in here we see that this the type 2 reversal right there. Test from above, break and reverse. In the right here we see more clear right there. So when it break away from the 930 high, it tells us that it's gonna go up. However, it pull back, it retrace. It retrace in order to expansion. So it's expansion, retracement, expansion, retracement. When we know that it rate this buy side liquidity rate, sell side liquidity, then this one will not be make a second leg down. So it's gonna retrace. It's gonna expansion and retrace. It's not gonna make a second leg down. We this morning we thought that it's gonna make a second leg down. That's a mistake. Oh, that's a lesson learned right there. Yeah. So one more thing we noticed that the pattern right here, whenever it have the retracement 1, 2, 3 retracement data. Let's look to see what the other day we see this pattern. So we can document this. So here's another day we have similar setup. It's not, it's not exactly the same, but do we see that retracement, expansion, retracement, expansion, retracement, and then the last expansion is huge. You see that? And if we mark down the 930, we can see that the first thing is it break away from that, and then it retrace below that, and then it reverse. But here we don't see so clear whether it's the type 1 or type 2. We don't have that setup for here. We did not have the setup. But the concept is pretty much the same. 1, retracement, 2, and 3 right there. Similar. It's not exactly right there. But here's that's the long, here's the short setup. You see that? Retracement 1, all right, retracement 2, retracement 3, and then boom. Is come down and it's way below the 930. Yeah, let's take this screenshot and see. So basically 3 retracement, 1, 2, 3, and mark down the high of the 930 with finality. So basically on October 16, we have similar setup right there. We just call them is a 3 retracement setup for now. So basically you see as a retracement, and then expansion, retracement, expansion, and then retracement the third time, and then it's explosion, which is expansion right there. And it worked around the 930 candle right there, the high of the 930 candle. And you can see that the reversal happened at the 10:45, which is exactly the same time for today. Right, for today it's 10:45 this candle when it start reverse right there on the second retracement, and then the third retracement, which is the last one. Yep, so yes, so the 10:45 is the second retracement, and then the last retracement, boom. And we saw another example on October 4. It's not exactly, but keep it the same. Right here is the low of 930 right there. So you have a retracement right after retracement here, and then you have retracement 1, retracement 2, retracement 3, and then in this time the reverse gives us a pattern like type 1 right there. You see that? Breaks, test flow, and reverse. And this happened around 10:45, not 14:50, not 10:45 like the last 2 example, but give us some idea right there. We're gonna do more case study on this stuff, and we're gonna follow up with you and present you more example. Yep. All right, let's do so one more trade that we took, but I think we exit early. Yep. So here's the trade that we taking and we mess up. So we missed the entry right here at 10 right here, right, 10:45. So basically if you look at the 9:30, you also have set up, but if we look at the 9:45, we do also have set up. It's type 1 right there. Test from breaks, take from below and reverse. So type 1 is stronger than type 2. So we have both type 1, type 2 on the 930 and type 1 on the 945. So we mix this trade there. We should put a buy stop at the level. And what did we want we miss? You know what? We chase with FOMO and we paid a huge price for that. Is that? And we're going and look, we chase right there. Eventually, it's gonna hit that. It's gonna hit that target. If we look at the chart, we see that that's the target. It's gonna hit right there. You see that? The London, it hit the London first, and then it go all the way to hit the PM high right there. So if we go in right there, then we have to give a very huge stop loss with the low of this candle. It will miss right there because stop loss has to be there. But because we chase so high, we cannot afford that stop loss. But we go one contract is good, but we also make a non-mistake. We go huge right there. You see that? We thought they're gonna break and go up there. It did not. You know, the market is just back and forth, back and forth. That's the reason why we have to be sure about the direction, the conviction, so we can stay in the trade long enough and don't go in when it's up here, this location, but we go in when it's retracement. So that's very critical right there. But it's okay, we make mistakes, so we learn. We see that, we go long and we go with a huge contract, and then boom, we got out. You said so, and then we chase again. In this case, we chase again, and we pay. You see right there, when we see the huge move, we FOMO right there, and we pay huge price for the 10, 11, 15 candle. 11, 15, that's the one curious because you see that it switch both and but we learn our lesson. Whenever we see the candle, stay away. 1, 2, 3, 4, 5, 6. I mean, wait for at least 1 hour. When it settled out, you see a beautiful setup gonna form right there. You see that? The break test from above, test from below. You see that break and test from below, it's gonna reverse. Just pick at this level, you can see the reverse, the type 1 reversal right there. Break, test from below and reverse. That is the type 1 reversal that we have in our playbook right here. Type 1 reversal up here, right? Break, test from below and reverse. That's the type 1 right there. So we learn out this huge lesson. Whenever we see a huge candle round right here, then wait for it settle out. Don't get engaged. And you see that right here. We get engaged. You see at 10 we go long again and we pay huge price. Boom. You see that? From almost 8,000, we give up all again. And look at that. Boom, we try to short them, right? We paid a huge price. We short them, boom, we go back. We give back our gains. And the more we do that, the more we get frustrated, and we can feel that. We need to stop away. You see that? We engage right away. We get mad right now. I mean, at that moment. And that's how we learn. We have to let our emotional out and see how we handle, how we manage them. That's the only way we learn. Give our room to make mistakes to learn. And it not go back. You see that? From almost, we give up about 5,000 right there. We give off that much of the loss. And then we go in and we try to short them right here, but I think we get nervous right there. We get access early, but if we stay in that straight, we can have some move right there. It's 11:45. All right, 11:45 right here. We stay. It not gonna hit that level, but at least it hit this level and it reversed. So stay away when we see this. In a tight range right there. Wait for this. That's one of the last key lesson we take a screenshot of this and then we can put a note to that so we learn. All right. Anyway, we run out of time. We thank you for your time and interest. We're always grateful for this opportunity. We do what we love, then success is coming our way. Day by day, little by little, in every way, we're getting better, better, and better. Have a great evening, and see you for the next episode. Bye for now.